Good morning, everybody. Kirk Spano, the day of the big crash. It is Cinco de Mayo, so good time to go and get a little tequila. All right, so we're going to talk about the stock market. We're going to review some of the things I've gone over, and hopefully you've been prepared for this because we've been talking about the stock market having this sort of reaction to the withdrawal of Fed liquidity since the end of last year. So when the Fed first announced that they were going to do quantitative tightening and raise interest rates and end quantitative easing, I told you at some point the market will react. And it's always hard to tell if the market's going to react sooner or later. So it's always better to start getting out a little sooner. But FOMO, everybody wants to make that last dollar on the upside. And then they lose 7, 8, 9, 10% in one day. And they're like, oh, well, it's got to come back. And then they're going to lose another 2, 3, 4, 5%. Oh, that's got to be it. And you have idiots writing articles, and I'll show you one in a minute. But, the bottom's in. So yesterday, when the stock market rallied on whatever they felt like rallying on, it was basically a short squeeze. Some guy on Seeking Alpha wrote an article, the bottom's in, I'm going to start buying aggressively. And you know what I've been telling you, just the opposite. So when the Fed says stocks have to come down, and if it doesn't happen on its own, we're going to force it, probably ought to listen. Because today, the stock market was down huge. Over 1,000 points on the Dow. NASDAQ was down, 5%? In one day, 5%. That's almost limit down. And it's because of the withdrawal of liquidity. The Fed announced that they're going to withdraw $47.5 billion a month off of their balance sheet starting June 1st. Why June 1st? It's kind of funny. Somebody asked them that in the interview. He said, we just kind of picked out a date. Doesn't really have to do with anything. It was a warning. He was telling you, you've got a few weeks to raise your cash. The market rallied yesterday. And again, I'm telling you, it was just a short squeeze. You could watch the action on level 2 if you buy that. If you subscribe to that, and you could tell it was a short squeeze. It wasn't a whole bunch of new money coming into the market, just rotations, people getting ready to reset their shorts somewhere else. And a lot of it had to do with moving their shorts over to the large caps. I did a day trade yesterday. I don't do many of them, but yesterday I told you to sell something, and I took a short position in the SP 500 and doubled my money today. One day, double my money. Why? Because I've been preparing myself for this for months and months and months. It's just a day trade. It's not something that I really share with you because it's not going to help you much. Shooter's over on Fundamental Trends doing day trades and mainly swing trades. And he's been telling you to get out of all your bullish positions for over a month. I think closer to 2 months. I'd have to pull up the older webinar where I said all the charts are breaking, so get out of the way. I spent that one day showing things turning over. So if you weren't prepared for this, I'm going to give you some tough love. It was your own goddamn fault. And you need to listen to me right now. The stock market's going to drop between another 10 and 30%. I don't know if it's 10. I don't know if it's 30. The Fed will decide. My guess it's 30, and then the Fed will step in. Tiger Global is down 50% this year. They're supposed to be the best guys out there, or one of the best guys out there. Ray Dalio is down. I think George Soros and Carl Icahn probably the only ones that are up. I haven't looked at the Icahn fund that I recommended to you a while back. I'm guessing that one is doing okay. I have said some things over the years. I'm going to show you one right now, and they just keep coming true. I said this in April of 2012. And in this article, I said that we were going into a multi-year bull market in the dollar. It was going to last a really long time. 3 years later, the guy who's more famous than me, Raul Powell, said, yeah, it's all about the dollar. No shit, Sherlock. The dollar has been going up for a decade now. And we're going to have to let some steam out, but I don't know, it could go a little higher. And this is going to be one of those things where it hits resistance, comes down, and hit resistance again. And eventually, it's going to be a new trading zone, the dollar being stronger. And everybody's like, but inflation and the dollar's collapsing. I don't know. Chart says different. So if the dollar is collapsing, what is this? Bitcoin, fiat currency. The dollar's collapsing. Really? Do we have to sing? Right? You know that scene, Wolf of Wall Street. If you're listening to the idiot, moronic, apocalyptic, anarchist, crypto nerds who think they know how the macro economy works because they read a book in college while they were studying marketing, you're wrong. The dollar has strength far beyond its balance sheet. So much so that not only should the dollar be the strongest currency on the planet, in order to support other economies, get out of poverty, create globalization, global trade, which has been 90% good, we let the dollar get weaker, and we borrowed and borrowed and borrowed. And what is one of the things, I believe was Machiavelli and the Russian guy, the Russian Machiavelli, Rasputin. There we go. Somebody came up with it, Rasputin. I was just watching him in some movie. He was just in some movie. What was he in? Was it not the Umbrella Academy? That's a show. He was just in a movie, the Kingsman. I mean, he's in one of the Kingsman movies, right? In any case, one of the theories of debt is that if you get everybody else to own some of your debt, they can't really get too angry with you because then you might never pay them. They're running into that catch-22. That guy owes me money. Why don't you go take it from him? How am I going to do that? Why don't you go yell at him? If I yell at him, he might never pay me back. The dollar is so strong because the U.S. economy is so strong. Technology, resources, labor force, protection of law. We manage our lying, cheating, and stealing a little bit better than most others. Not good, but just better. Who's ever going to invade us? Get allies, big allies on both sides. Get our oil from the north. Get all sorts of cheap produce from the south. The United States has been winning for over a century, and it's going to keep winning, probably for another century. So you just have to get it out of your head that there's some imminent economic collapse coming, because what's going on right now is short term. It only happened because of COVID and the fact that Saudi Arabia, Russia, and China are all doing things to make inflation happen in the short run, very short run. Inflation will start coming down later in the year for all the reasons I've talked about. So let's talk about them again. Oil, number one thing. Oh, that damn Biden's not allowing us to pump more on public lands because public lands account for 6% of our oil pumping. Well, wait a second. That means that 94% of the oil that we pump is on private land? Well, then why does the 6% make that so much difference? Well, because they're not getting more. Well, then why is it then half of the permits on public lands aren't being drilled right now? Well. Sounds kind of fishy to me. But hey, back in 2020 during COVID, there was a deal that the United States president stupidly pushed while the Saudi Arabians and the Russians giggled about slashing oil production during COVID to support the price. And now all of a sudden, OPEC's like, oh, we're not going to pump more oil. We like the price up around 100 while we can get it. But public lands. You have two of the three biggest oil producers in the world that are underproducing compared to where they were at in 2017, 18, and 19. Actually, 14 through 19 with one brief respite. But public lands. This is half of inflation is the oil. By the end of the year, the United States is going to be pumping an extra 1 million barrels per day. And that's light sweet. It's all that we need. By next summer, Venezuela will be contributing a little bit more oil because Chevron was given permission to cut that deal. And they're doing it right now. Right now. And it doesn't take a whole lot to get that oil back online. 3 to 6 months to get it started. And within a year, it's cranking again. Guyana, getting more oil from Guyana. Who's doing that? Chevron and Hess and Exxon. And then, by the way, you got those crazy Canadians up there saying, if you just drive your trucks up here, we'll send you more oil. Hey, so the oil's coming. And that's going to alleviate a lot of the oil pressure. So once the price of oil starts going down, which it will after Labor Day, probably not till the driving season's over. Now all of a sudden your comps show negative numbers. So it'll show up as deflationary, even though prices will still be higher than a few years ago. It'll be lower than the past year. And they do 1 year estimates. So if the price of oil drops from 100 and whatever it is down to 80, between 60 and 80, like McAfee over a Meta said is where it's heading, right? I'm talking to CEOs for you, for goodness sake. You got the CEOs of energy companies saying, yeah, this is short term. Oil will go back to between 60 and 80 soon enough. So we're going to base our projections on that at the conservative end at 60 rather than even 80. And for sure not based on our projections on at 100, 110. So the oil executives know the price of oil is going down. They're profitable at 60. Price of oil is going to go between 80 and 60, probably a lot quicker than you think. Probably get to 80 over the winter, maybe ticks up a little bit for summer, then ticks back down. By the end of next year, probably be in the 60s. But public lands. But my trade. But hyperinflation. Ugh. Don't you get tired of the trader narratives being wrong over and over and over and over again? They just talk their book. What's going to help me this week and next week? It's mind-numbingly boring. So here we go, supply chains. That's one of the other things that's causing a problem. So you got OPEC and Russia holding back on oil production while they can. You got China doing this COVID zero thing that doesn't really work, that the rest of the world has proven is pretty much unnecessary at this point. Now we have vaccines, it's unnecessary. We don't need COVID zero policies when we have vaccines. That doesn't mean that we can be stupid and just walk around and talk to each other nose to nose when we're coughing. But anybody vaccinated has remarkable resistance, 50, 60, 70% unlikely to even get it. And almost nobody gets real sick from it anymore if you're vaccinated. Now, the 20, 30% of people who refuse to get vaccinated and the half of the world that doesn't have vaccines, right, they got to be even more careful. China's not one of those places. They have vaccines. So why are they holding back on supply? It's a pretty good question, isn't it? I think it's a pretty good question. Do you think that maybe OPEC, Russia, and China are somehow in cahoots, try to screw with America, try to screw with the dollar, try to get us to vote really stupid because there's inflation for a little while? I think so. Globalization is one of the greatest things ever for the Western democracies, and they're trying to blow that up or at least get more control of it. And for sure, I think Xi has played Putin because he knows that what's about to happen, so oil's going to get cheap. And Russia can't sell it to the West anymore. So suddenly, for the stretch run of oil, China's going to have cheap oil, and that's going to make their transition to cleaner energy a whole lot easier. Russia's the big loser here in the long run. Putin's going to die. The West will finally start cutting deals with them. Between now and then, it's going to take a long time to straighten things out. Long time to earn that trust back. Frankly, I think it starts with a bullet to Putin's head. We'll see if that happens. I saw a rumor posted in the news that Putin had cancer. Maybe not. I don't know. Seemed like a fake news story to me. I mean, it came from an anonymous source from the New York Post, some hack website, fake website. Very, very good journalism by the New York Post once again. If you're reading the New York Post, you might as well just double up and read Zero Hedge at the same time. Just try to see how twisted you can make your brain. Because all they're trying to do is wring a click out of you and make that penny a million times a day. In any case, OPEC, Russia, Saudi Arabia, China, trying to screw with the United States and the Western world. Let me ask you a question. Do you really think what we just saw on the response to Ukraine, the coordinated response to Ukraine, how fast it happened, how severe the sanctions were, do you really think the West is that dumb? In France, they had a populist running against Macron. She got crushed, 17 points or something. As unpopular as Biden is, just because he's a crummy speaker and he's older than the hills, policy's been pretty good. Economy's got better, even though we have inflation, which I'm showing you right here, started way before Biden. I wrote an article a couple of years ago, 2017, talking about what Gary Cohn was saying, who is a Trump economic advisor. I was predicting stagflation right about now, 5 years ago. Hard to get it right to the right year. I thought it was going to happen in 2020, but then COVID. So COVID just changed the timelines. A third of the ships have been sitting in port now since about Christmas time. They've offloaded a whole bunch of them. We talked about this as well. Why are all those ships still sitting in the port? They have the people that run in the port of Los Angeles 24/7. It's because the ships don't want to unload. Somebody's telling them not to. Where are these ships flagged or indirectly flagged? Almost all of them China. The ships that we did unload in the first quarter was enough to slow down GDP, make it look like it's going to be stagflation. And I do think we're going to get a whiff, not a big whiff. I think any recession is short and shallow. It is met with easing from the Federal Reserve and just another bill from the United States government. But debt. What has it mattered in your lifetime what the United States debt has been? Interest rates have been nothing but low for 20 years. Standard of living has gone up for nothing but 80 years since World War II, 70 years. All these narratives that haven't mattered, that won't matter, that'll never matter probably, but people just keep talking and talking and talking. Isn't it tired and old? Here's the narrative to pay attention to. The United States is the greatest economy on the planet for a large economy. I always put that caveat in because there's a couple of small ones that are pretty darn good. If we would just stop stealing from each other and hoarding and talking like whack jobs and realize how good we have it and how much better it could be if we stop being assholes, we'd be like, got a pretty good hunk of land here, don't we? Go west, young man. I have not had any tequila yet today. Remember all those articles I wrote about slow growth forever? Now it's starting to hit headlines. It was a little bit blurry. It has to do with China. China's growth is slowing down. Why? Demographics. Demographics, you've heard that word before. I want to show you something that I wrote today. Be a little bit hard to read. Let me zoom 200%. There you go. This is a class I'm doing for the Money Show in June. Talks about the major process or the process for investing in the 2020s trends. You probably call them mega trends. So I borrowed my process, that 4-step process I talked to you about, over and over again. And I have to keep repeating myself because we always have new people. But you need to understand this process. In fact, I'll post this in the chat room. What's our 4-step process that I borrowed from 2 incredibly big institutional investors? They're still around today. I borrowed this in the 1990s. Been using it ever since. It's why I find so many 10-baggers. I just shrug my shoulders when people say, well, this one went down. It's been down for 3 or 4 or 5 or 6 months. A year. Oh, my God. I accumulated exact sciences for 5 years before I made any money on that. And then it was a 10-bagger. I accumulated pretty far apart at different prices as I kept track of the company. And I made sure they kept making progress. And 5 months before they were set to make some huge announcements, market still didn't care. Why? Because it's been taking so long. They just ignored what was right in front of their faces. More on that in a second. So identify the long-term secular trends and you're going to get ahead. What are the long-term secular trends? Aging demographics, which are deflationary. Fourth industrial revolution technology, which is disinflationary. The shift to cleaner energy, which is a response to inflation, energy security, and climate change, and ultimately will be disinflationary. And then finally, our need for greater resources, which is actually inflationary. So we have demographics, everything related to technology, basically, and cleaner energy, pushing prices down. But we have a supply shock, an oil shock, a housing shock, and a resource need, all in the very short term, creating inflation. What seems more permanent? That technology will keep getting better and people will keep getting older, or that we won't have enough stuff for a little while? Are we going to be short of stuff forever? Or because of technology and ingenuity and entrepreneurship, and government policy, and central bank policy, we'll end up with enough of the stuff to support our lives? I'll bet on that. Government policy is number 2. Just kind of mentioned that a second ago. Government policy and central bank policy, particularly the United States, but also with support from Europe and Japan, South Korea, Singapore, pushes things along, pushes through the stupid politics and, gaming of media. There's a lot of gaming of media, Elon Musk, so they can keep making money the way they want to make money. Government policy steers a lot of money into various industries. Those industries are generally the winners. And there's skimmers in there for sure. Central banks control the money supply. The Federal Reserve is the most powerful central bank on the planet. It's more powerful than all the other ones combined, as much as they try. Why? Again, just goes back to our hunk of rock, man. Nobody's ever going to have our geography, but it's just geography. Well, duh. Dude, you're on a finite planet. The best geography wins. If South America was all one big country, or Africa was all one big country, it was governed the way the United States is governed, give or take, maybe they'd be the most powerful. We have a contiguous block here in North America. 3 countries is all, with just one line border. I mean, look at the map. Boom, 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 right in a row. No zigzaggy lines, no disputes about access to the sea. You just can't beat what the United States has. It's just such a massive advantage that's hard to quantify. But I will say, at the start of my career in the 1990s, did you know the United States was over half of the global economy? 10% of the population was over half of the global economy. Think that through. And we're still about a quarter of the global economy, same as China. China has 5 times more people. When I say something about macro analysis, I'm just going to tell you right now, I might not be the best guy out there, but I'm a 1%er. I get this macro stuff right over and over and over again. I've studied it since I was a kid. For whatever reason, I've been able to get away from the stupid stuff. Made some decisions early in life to learn this, to understand why. And usually it's follow the money. To understand the U.S. government policy, though clearly predatory at a certain level, is generally altruistic. And we allow certain people who move the needle to get fabulously wealthy until they start running their mouth. Elon Musk. I mean, think about Tesla. We needed a company like Tesla to move the needle on climate change. Well, kind of. What about energy security? We've known for decades that eventually oil runs out. We needed to eventually not be dependent on oil because we would have been beholden to the oil producers. And right after 9/11, George W. Bush said, well, enough of this shit. Why don't you guys go start fracking? We know we've been able to do it for a while. 2005, fracking starts. By 2011, some kid in Milwaukee's got it figured out. Wins a big award because my research came out in public at the same time that Goldman Sachs and Citigroup were working on theirs in private, and the Wall Street Journal got a hold of it when they checked to see if I knew what I was talking about. Lo and behold, I'm the next greatest investing columnist. Make a boatload of money for about 5 years between Exact Sciences and oil stocks. Age of QE screwed me up a little bit. The massive extent to which oil has been manipulated screwed me up a little bit. So I just left. I left the market that I was like, well, I could sit at this poker game and keep trying to beat the guys who know what the cards are, right? Just not play that game. So when I say don't invest in oil stocks and oil, it's not because I don't think it might go up. It's because it's a rigged game. And you don't know when they're going to cheat you. I also know, going back to those secular trends, the energy security comes from not having to be reliant on OPEC and Russia. We're learning that the hard way right now because we were too stupid not to listen to Exxon about what climate change was, about how much oil we could produce. Exxon's an evil company, I'm just telling you. Chevron, I'm not sure about, but I think they are too. But that doesn't mean we didn't need the oil. We did. But it also doesn't mean that we shouldn't have moved away from it a lot faster, but they had interest. So they funded propaganda to tell us that climate change was fake, even though all the thermometers have been going up for 50 years. This does all come back to government policy. At some point, the United States, after trying everything else, gets it right. And we are on the verge of getting it right. Somebody says, with supply chains, we sent all that manufacturing to the Far East. Kinda. There's only a few industries that we really need here or need to move back here. Most, and take a look at the unemployment numbers, most of the jobs that we don't have anymore, we don't need, nor do we want. They're low pay. Our jobs have gotten to be higher skilled, higher paid. And we're to the point now with the boomers retiring that we need a lot of robots or a lot of immigration or both. What you're going to see in the next 20 years is that global unemployment is going to fall dramatically. Why? Again, it's aging. And the countries that do the best will be the younger countries that have stability and resources and education and people stealing less than what would otherwise be normal. Right? There's always stealing. I'm not saying it's good. I'm just saying it is what it is. It's always stealing, says the Italian guy. Countries like India, tell you what, if they can get out of their own way bureaucratically, and Modi seems to be pretty good at it, it could be a big deal. And pass China in the next 20 years. It's my opinion. Kind of like Ethereum and Bitcoin. I think Bitcoin is going to do well, but I think Ethereum is going to have a bigger role in the economy because of digital contracts. Doesn't mean the currency necessarily goes up as much as Bitcoin, because Bitcoin, different protocols on how much is produced. Supply and demand comes into play. All these things, lots of moving parts. So in analyzing the fundamentals of, say, a country like India, or an industry like EVs, or solar, or batteries, or lithium, or silicon, or potash, you got to ask a couple questions. How are their balance sheets? How are their assets? How's their technology? And can I get it cheap relative to what it'll be worth in a few years? So all investing is value investing, whether you're buying undervalued assets or tomorrow's growth. And to the extent that we can find assets that the stock market assigns no value to today, we're going to make a lot of money. And that's what I look for. Right now, the place where you can find the biggest bargains are in the former SPACs because they were easy to short. The shorts were highly successful, and there was a lot of hate for them because Charlie Munger ran his mouth. He hasn't been right about a lot lately. He just bought a whole bunch of Alibaba again. That's a super long-term investment predicated on China reforming itself a bit, or at least having motivated self-interest to see the stock price go back up. And they might. Now that they've banged down the tech companies in China, maybe they'll let them off the mat for a while to suck in more Western money. That's been the pattern my whole life. Suck in Western money, chew it up, spit it out. Do you remember all those reverse mergers about 10 years ago from China? I do. I bought one. It's a great company. It's still in business. Doesn't trade in America anymore, and it's a worthless investment. And that's what's coming. If these stocks get kicked off the U.S. stock exchange, you're screwed. So the only way to really invest in China is through funds. So EMQQ, I flirt with it. And Alibaba is my proxy because it's really the only company I want over there. I want things that are involved with cloud, e-commerce, IoT, because eventually resources get scarce over there again. They've been stockpiling on the cheap whenever they can. And they have so much money saved up that they should be able to manage all right for 20, 30, 40 years, but that doesn't mean their growth will still be high. It won't be. They'll be managing a slow demographic decline the same way that we've had to do for the last 20 years. The difference is we're about to come out of it and they're just going into it. We have the millennials hitting their peak earning and spending years. Meanwhile, the baby boomers are almost all retired already. And what you're going to find is a lot of companies are going to start employing baby boomers again who realize, I didn't save enough for retirement. I better go get a part-time job or a consulting gig or find something. I know a guy, I played poker with him, and nice guy, Jim. His name was Jim. And he retired twice. Both times. He was a pretty skilled guy. Got called out of retirement. Hey, we'll give you this job. And his daughter had a shithead husband. Ended up, I don't know, you know what happened to him. They got divorced. And the girls, his granddaughters, needed everything from him because his daughter had no money. His shithead former son-in-law had no money because they were both drug addicts and they didn't work. What if I told you about the patriarchs of families? They feel responsible for things. That's why they panic first. They don't want to let people down. But he didn't let anybody down. He worked himself into a grave. That has been the pattern in the United States for a long time. And it's finally started to shift a little bit. Now women have all the stress that we have. Isn't that great? But the reality is this all plays back into the economy. If people are short on retirement money, they're going to have to go back to work, at least for a little while. And with an equal size and actually bigger generation behind the boomers, and actually a small, very affluent generation in between them, and what's developing to be an affluent younger generation, the Zers, right? The Xers, me, the Zers after the millennials. The United States is in pretty good shape. So in analyzing the fundamentals, it's just all working together. How are these companies going to make money? Well, it's going to be in shifting the economy slowly over 20, 30 years. Clean energy, fourth industrial revolution technology, the rebuilding of many, many cities to be more walkable and less car dependent and more sustainable. And that's going to take forever. We're probably going to screw it up in a lot of cities because our city planners are junk. I mean, our city planners are just, I've driven all over this country, and I'll tell you what, there's almost nothing that's laid out the way that it should be. And so we have to tear a lot of stuff down, and you don't tear stuff down that's valuable, especially if it's owned by a rich guy. So you got to start in the other neighborhoods and in the poorer neighborhoods, but nobody wants to do that because on one side they cry, don't force these people out. And on the other side they cry, where's the money going to come from? I'll tell you what, if we get a real estate collapse here, I not only will urge you to buy a handful of the REITs that I have suggested, but I will tell you to go buy a hunk of real estate, even if you don't do anything with it, even if you just speculate on it and partner with somebody to have them rebuild it, because that might end up being the greatest income generator you've ever had, because the dividend, if you think about it that way, from investing in real estate at the bottom of a cycle and then redeveloping it, pay way more than a 2 or 3 or 4% dividend, and you won't have to trade options to kick out extra premium. Why am I telling you all this? Why am I deviating? It's because this is potentially the next great end of the world that you can capitalize on. Will it happen that way? I don't know. It might not. But if the Fed really has to kill aggregate demand, then you can start taking a look at these companies. You just buy the large caps as a group for the most part, and maybe a couple cherries. Amazon, I think. Google, if it comes down. Microsoft, Apple, right? We've talked about them. The small caps are hugely inefficient, gigantic beta, along with emerging markets, and you can buy that because it'll be so cheap, it just won't have anywhere else to go but up. And then the mid caps, that's the spot where you have both the growth and the safety. Now, granted, you've missed the first giant move up, but you still have a lot of the S curve to go. And these are companies that are extremely unlikely to go under because they've already had proof of concept, started making money. And a lot of them get added to the S&P 500 as your old economies fall out. It's mainly old economy, right? Companies, because they just don't have the business anymore. The oil companies are all going to go to pot. We're going to be left with 1 or 2 oil companies on the S&P 500 in 10 to 20 years. 1 or 2. My guess is 2. Couple pipelines, couple gas producers. That's it. The S&P 500's sector for energy, which got as low as what, 3.6% at the low end? Think about that. How's the S&P 500 only 3.6% energy a year or two ago? Might get down that low again, or at least on the oil and gas side. But then you're going to have companies like Enphase, right? Sunrun, a whole bunch of them be your big S&P 500 energy company. How are we going to know when to invest? That's where the technical and quantitative analysis comes from. I'm a position trader. I'm not trying to win the next 3 to 6 months. I'm trying to win the next 2, 3, 4, 5 years. I've showed you some of those charts that I make with the bottom fishing and where the first level of big support is. And what did dozens of people say to me last year and the year before? It'll never, 2021 in particular, it'll never get that low again. ARK's 137. It's never going back down to 60. It's 48 today. And for what it's worth, I took a very small starter position in ARK today because I didn't want to pick out stocks. So I just bought some ARK because I like the top 10 stocks because suddenly I kind of like Roku again. Down 80%. It got me thinking. Shooter, who's clearly more sexy than me based on what I'm hearing, he's more of a short-term guy. He's making trades week to week, and we overlap on that 3 to 6 month period. But you like his pictures. Elliott Wave works when it works. It's best in the middle of the market. And I told you that before this all happened. I said Elliott Wave doesn't work great at the edges. Works best in the middle of the market. My quantitative analysis works best at the edges of the market, the pivots. And between the bottom pivot and the top pivot, I just try to ride it all the way through. I sell covered calls a couple times and cash secured puts a couple times based on the longer term RSI, money flow, shaken, right? The different money flow measures. I don't need a bunch of pictures. The numbers tell me the answer. It's math. What I'm doing is actually harder, but simpler at the same time because the computer gives you the answer. So all those charts that I showed you a year ago, and nobody wanted to believe that things would come down 30, 40, 50, 60, 70, 80%. Well, they have, except for the mega caps and the large caps. And what we probably saw today was the beginning of the end of the correction, right? Everyone has to feel like, well, it just started. No, the small caps are already crushed. A lot of the mid caps are crushed. The bottom third of the S&P 500, I showed you that last week, is already beat up. When the 50, 60 biggest stocks finally come down, the bear market is over. And you better be buying. So I hear whining that you didn't buy, that I didn't add enough color. I've tried to be very colorful today. Being as I'm a city kid, who hung out at a lot of bars, had a lot of old men in my life who like to swear, it was hard for me not to end that sentence with MFers. I need you to understand what I'm telling you, to validate me, to rationalize my existence. I'm just kidding. I just want you to make money, man, woman, peoples. You have to not be emotional. You have to understand that my macro is mostly right most of the time. Not trading oil after I had done it for 20 years wasn't a mistake. It was a choice. I knew that there were cheaters at the table, just like I do at a casino. If I know people are playing together, I win one big pot and then I get up and leave. And they get mad at me. Well, you just won $400. How can you get up and leave? Because you guys are cheating. I knew it. That allowed me to win a hand. And now I'm leaving. I'm going to go get my free drink. Here's what's going to happen next. First off, on the big up day, I told you Powell is wrong. The market is getting long. This is just a bear market rally. Trim something now. That's what I said yesterday when it was up 400 or 500 points. Large caps have massive supply-demand problems. Sell SPY and highly correlated funds now. I've been telling you that for a while. I pounded the table yesterday in the chat. You need to be in this chat. Not all the time, but you ought to check it. I mean, if you're looking at your stocks during the day or your ETFs during the day, look at this too. This is the real-time messaging system and fundamental trends too and shooters over there. I dropped some other stuff in here today, right? If we get a recession, it'll be short and shallow. Got that 1 million barrels a day of oil coming. Got oil coming from Venezuela, more Canadian. Doesn't take a long time to get it, right? It's not like digging a mine. Housing prices, higher interest rates, but also major new additions. And what if they start taxing Airbnb and short-term rentals more to force some people out of that market and rent long-term, right? Markets seek equilibrium, and they always find it. They usually pass through. We don't spend a lot of time at equilibrium for very extended periods. I wrote about that. I forget what year it was, 2014 maybe? I don't know. I'd have to look it up. But there was a year where everything just kind of like was perfect. Everything was in equilibrium. We don't get there very often. We usually pass through. During the summer of 2020, we got back to equilibrium really quick and then shot way above it. Now, here's the question. I've showed you valuation charts. We're still above the standard deviation, the second standard deviation. Market is still expensive, mainly at the top. The small caps are undervalued. The mid caps are a little undervalued. The large caps are a little overvalued, and the mega caps are very overvalued. Think of it like an accordion. It's going to be like a compression. Everything's going to be cheap for a hot minute. But the things with the most upside will be the small caps and the mid caps. And they always lead out of a recession. They always lead out of a bear market. The high beta stocks are what you want. You don't want boring stocks coming out of a correction. You want the high beta stocks because those are the ones that when the stock market goes up 50%, they'll go up 100. You want high beta. Do you understand what beta is, everybody? Right? The volatility measured against the market. You get your alpha from having high beta because when everything's super cheap, there's just nowhere to go but up. So you buy the things with the biggest upside, the highest growth, the best quality. You upgrade your portfolio. You don't get speculative. You say, okay, I'm looking at 10 SPACs, 20 SPACs, 30 other small caps, a couple dozen mid caps, a couple dozen large caps. Which ones have this combination of value and growth and quality? Usually 2 out of 3, because that ain't bad. Where can I make the most money? Wayfair suddenly came across my desk. Somebody I respect pointed it out. I'll take a look at that, right? So I talk about this, focus on quality growth and the stocks that did relatively well the last 2 and 5 years. Why? Because it's almost always repeated. The companies that the public likes. It's just the way it is. So I'm not dying to find new stuff. The new stuff are all those companies that IPO'd via SPAC. Other than that, a lot of the stories will be the same. You're just trying to find the ones that will go up the most. Somebody pointed out Shopify. Yeah, I'm going to take a look at that too. See if it comes back to us. Because innovation is still a winner. Tech is going to be a winner the rest of your life. Certain materials are going to do well for a while. But as we've learned from the gold stocks, those rallies are short-lived. They're sharp and short-lived. So they're more like trades. You should have half of your portfolio in tech and tech-related things and industries that use technology well. So between tech and tech-related and industries that use technology well, that's going to be almost all your money. Handful of REITs, maybe utility here and there. Even the utilities are tech companies now. So anything that doesn't use tech well or have something that just can't be replaced, like certain real estate. We talk about Store Capital, the one that Berkshire owns. Why do I like Store Capital? Same reason they do. The hunks of land that they have their strip malls on are easily turned into something else. It's super valuable land. And on the balance sheet, it doesn't look like it's a big deal, but it is. It is a margin of safety that you just don't find in many places. When the economy gets hot, when interest rates start coming down again, and real estate starts going up again, Store and Stag and Vici, some of these other companies that I got you into in April of 2020 will come roaring back. Maybe it'll be a step ladder. And maybe we don't even set new highs. Maybe we just go back to the highs and then we have another correction. We'll know when we get closer. But if you raised cash, like I told you to, if you were moving in that direction for 6 months, like I told you to, you should be able to do some really neat things. Now, if you're not heavy enough in cash right now, you're going to have to start flipping assets. And I don't know that you should really go to cash because I think you'll end up missing the trades. But if you do want to try to go to cash now late, find an up day, hopefully tomorrow, trim things, don't sell them outright, and start with your large cap mutual funds, which you should just sell down to zero. Sell SPY in particular, anything highly correlated to SPY. But have a plan for getting back in quickly with at least some of the money and then scale in. Every 10% down in this market, put a third of your money in and you'll win. And if you're buying off of my plug and play list and my global trends ETF, you'll win. I will say this global trends ETF, if you want to be fully invested most of the time, start there because just rotating in the right stuff every so often is going to make you beat the market pretty easily. Stock screener. RSI is coming down on the weekly across the board. Not quite there yet on the monthly, right? Getting into the 40s pretty quick. This market has some more room to go down, between 10 and 30%. Dollar, I just want to show you this. It's a heck of an overbought on a dollar, isn't it? So my guess is that this turns over during the course of the summer. And then by the fall, when they turn off the QT, I don't know if they'll have a single month where they do 95 billion. I think they'll do 47.5 billion in 3 or 4 months. And here's why. I asked this in one of the chat rooms today. I think Fundamental Trends. Explain to me why the Fed balance sheet matters. Can anybody do it? Or is it just a big number and it must be scary? $9 trillion, 1/3 of the economy, the annual economy. What is that over 30 years if you think of it like a mortgage? $9 trillion into over 30 years. Now adjust that for inflation. It's a spec. It's a spec. Debt relative to money supply has fallen. And there's a shortage of dollars on the planet. People want dollars. They fight it as hard as they can, and they still want dollars. You go to any foreign country in the world and you say, well, I give you a peso or a real or whatever, or I can give you $1. Which one are they going to ask you for? The United States is so rich and so far ahead in the game. The United States doesn't have a debt problem. Not yet. Not even close. And it'll only become a problem for a hot minute around 2030, give or take, because we're going to panic about the baby boomers. And we have to not let some politicians screw us over and take away our benefits that we've been paying for, because there's no reason to do it. Social Security is fixed with a minor tweak, and all we have to do with Medicare is just give it to the whole economy and have everybody buy their own supplements so they have some skin in the game. Let the corporations get out of being healthcare providers. Just have them buy supplements. It's so easy to fix our system, but we allow ideology and skimming to get in the way. So I will go back to Winston Churchill. The United States always does the right thing after they've tried everything else. Rinse, repeat. It's been going on for a very long time. The dollar is going to keep getting stronger. It's going to break out of this range to the top side sometime this decade, around between now and 2030-ish. During the spikes for the dollar and all the asset prices come down, you got to be a buyer. Then when the dollar comes down cyclically, right, and all your asset prices go up, the dollar gets down here, start selling your assets. These are 2-3 year cycles, sometimes longer, sometimes a little shorter if there's a pandemic. It's truly, truly not that hard. Get on the right side of the secular trends. Stop whining about things that you don't truly understand because somebody said, well, you can't borrow forever. Well, yes, you can't borrow everything, but think about the context of U.S. debt versus our next 30 years of GDP. And you go, think about generationally, think about it by the decade, think about it over the 100-year lifetime that most of us are going to have. Think about it in the context that technology is disinflationary. And what happens when most energy is renewable? And what happens when we drag some asteroid down to the planet? We have all the copper and iron that we'll ever need, or whatever the heck it is they get from asteroids. U.S. debt is low right now. Not as low as it was, but way lower relative to anybody else. We have the cleanest dirty shirt out there in a world of dirty shirts on the major economies. The system's been working pretty well. We got ahead of ourselves because of the pandemic. It opened up an opportunity for Russia, OPEC, and China to screw with the system. And so long as we don't start World War III over globalization and the idea that somehow it's been bad for you, right? Individually, there's been people who have been left behind. There's no doubt about it. I live in the Midwest. It's not like I don't see this. But the reality is that globalization has been good and we need more of it, not less. But at the same time, we have to have our strategic industries, at least enough of it here so that we can't be messed with. We need equilibrium. We need balance. And we're moving in that direction. By the middle of the decade, we'll be there. And the market will adjust ahead of time because it'll see it coming. So I'm trying to help you see that. You're going to want to really buy this correction hand over fist sometime this year, maybe twice. I don't know if this is going to be more like an M shape or a W shape, but either way, presidential cycle is coming. If things get too bad, the government spends the money because A, we have it, and B, why wouldn't we? Why would we allow horrible things when we have enough money in our checkbook to write the check? And we do. What the Fed is eventually going to do is they're going to let the debt roll off of their balance sheet rather than forcing the issue. And they will make deals with other countries over time to sell some of the debt because they want the dollars. And the dollar is going to keep getting stronger as we no longer need the petrodollar. We can let the petrodollar die. It doesn't matter. We don't need it no more. And there'll be some volatility along the way. When the volatility is negative, you buy it. When the volatility is positive, like it was last year, you sell it. Easy peasy. Go fishing, golfing, boating, whatever it is you do. Watch baseball games. Go play poker, whatever. All right, I'm not taking any questions today because I have dinner in a half an hour and I have to shower up again. So if you haven't raised some cash, look for ways to do it without sitting in cash. If you want to talk to me, go on Blue Mountain Asset Management and set up a time to talk. I'm open to that. I might set up a couple more calls, but I know people want to do things individually. I'm very willing to consult with people. If you've already signed up for Right Capital, I will go through and open up access to the new people on Right Capital. Right, so Right Capital is the free financial planning software. You know, there's a link over on Fundamental Trends as well. So go ahead and use it. Run some Monte Carlo simulations. There was an interesting article, I think, in MarketWatch today. It could be somewhere else. And they said $1 million isn't the standard amount to retire on anymore. And they're right. Depending on how old you are, the number is between $1 million and $4 million. So if you are 30-something listening, your number is probably $4 million. If you're my age, 50-ish, 50-something, it's probably $2 million ahead. And if you're already retired, $1 million is probably fine. Kind of ballparking it. We'll see what happens with inflation and deflation 20, 30 years from now. I think price levels might flatten out for a really long time. And we'll be fighting deflation eventually. But by then, everything will be so cheap and easy that it'll be like Star Trek, and we'll be like, hey, let's go to Mars for vacation. So, all right, have a good Cinco de Mayo. Again, I'm not having any tequila, actually. I'm just going to have myself a Americanized Mexican beer. All right, have a good night.